Hi everyone. Fed Bostic came in hot this morning, saying no cuts early this year, if at all. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So like I said, Fed Bostic says there's only going to be one rate cut this year, and it's likely going to occur in fourth quarter. Fed Bostic did voice his concerns about inflation. He doesn't think that rate cuts make any sense early this year because of inflation ticking up a little bit. And he also mentions here he expects continued robustness in GDP, meaning that the economy is still strong, unemployment is still low, and he expects the rate of inflation to decline slowly, meaning that they can be more patient here when it comes to rate cuts later this year. And it is worth mentioning that Fed Bostic is one of the more hawkish members. As a group consensus, they did talk about 3 rate cuts this year, and that is what markets have priced in right now. But only one cut from Fed Bostic, again, puts him on the more hawkish side of the group, but he thinks it's going to be a more bumpy road on the inflation side, especially pointing to those last couple of months that we've seen on the CPI and PPI data. Otherwise, moving over to the normal data, fear and greed, you can see didn't move much, 62 from 63 yesterday. Regular greed on momentum and strength, that was a pretty substantial step down. Breadth still hovering in extreme greed. Put call ratios, no changes there. VIX pushed up strongly yesterday, did dip a little bit here today. Safe haven demand back into neutral, and junk bond demand back into fear with that pretty substantial fall that we've seen over the last few days. Overall, a little bit more mixed than what we've been used to seeing over the past several months, and we'll see if this continues to trend down on this indicator. Moving over to seasonality, you can see here for the third, we were expecting a very slight increase on the NASDAQ, and that's basically what we got. The Russell expected to be down slightly, got a little bit of a bounce there. The dip yesterday was quite strong, so it made sense that we got a little bit of a bounce, and then sideways chop here up until next week, and then we're expecting some market weakness. We'll see how that plays out, but right now we should be okay, at least for the next few days. Moving over to the economic calendar, CPI data for the Eurozone came in below expectations. You can see those numbers here, 2.9 and 2.4. Those were all good. Unemployment rate quite high at 6.5, and it did come in higher than expected. And then ADP non-farms put out a short on this morning, came in higher than expectations. So job growth continues to be quite strong. Economic growth later in the day, not as great. You can see global composite PMI below expectations, but above the 50 line. Non-manufacturing employment well below the 50 line and below expectations. Non-manufacturing PMI below expectations but above the 50 line, and then prices here way below expectations and again above the 50 line. So definitely a mixed bag on the economic data, and markets seem to shrug most of that off, if not rally a little bit. And then looking at tomorrow, there's really not much on the calendar for tomorrow. And then looking at the Friday session, there is a ton on the calendar. Non-farm payrolls, unemployment rate being the key highlights. Hourly earnings expected to step up pretty substantially as well, which could be a contributor to inflation. You can see stepping up from 0.1 to 0.3, fairly substantial for a month-over-month basis. But the unemployment rate, I think, is the big one here. It stepped up from 3.7 to 3.9 before the previous read, and now we're expected to stay flat at 3.9. If this steps up a little bit tomorrow, that could be quite bullish for markets, leading the Fed to pay a little bit more attention to that secondary mandate for the Fed, which is keeping unemployment within reasonable levels. Moving over to Max Payne, you can see that call wall seems to get bigger every day. So you have 525 now, 527, 530, all big call walls. Put call ratio continues to be quite low. Puts all the way down at 513 and 510. So that gives you quite a bit of room here, about almost 1% of downside potential, and that doesn't even get you to the bottom of the calls. So it seems like we're going to get a little bit more of a bearish finish this week, which does kind of fit with the seasonality rolling into next week. But this call wall just seems too big for markets to go higher, at least in the short term. Speaking of markets, looking over here at the charts, you can see it looks like we have a little bit of a bear flag starting to form. You can see that dip low, slight rally here, potentially coming into some resistance. You can see we dipped pretty heavily off of that resistance, and you can see it here on the daily chart. Hit that resistance, hit the 9 EMA, and sold off. Momentum and RSI still bearish, so it does look like a bit of a retrace. Definitely doesn't look as strong as these previous rallies coming off of these dip lows. It doesn't mean that it can't recover again tomorrow. It did look decent into the close, but look at that bearish candle on the last candle of the day, dipped all the way down to 517.86 and then bounced here off of that 200 SMA, so critical zone there on the hourly chart. 519.14, you want that to hold. And then on the daily chart, 517.12, and then 21 sitting down there at 516.66. So critical zone in here on the daily chart, but a little bit higher here on the hourly chart. Really need those zones to hold and start to push to that highly traded zone on the hourly, which would be about 523.36. I do think we could get to that level in tomorrow's session. Doesn't mean that we're going to hold those gains into the Friday session. I think we'll probably see some more weakness before the week is over. The question is that tomorrow or is that Friday? Moving over to the Tasty charts on the hourly chart, you can see we did get a reversal of conditions. So we took out that ATR stop to the bear side at 520.08. You can see those coming in here at 516.94. So again, very important, right in that same zone that we saw on the other chart. Very substantial. We're right in the middle of the range. We are below some of those longer term EMAs and SMAs, which are currently sitting around 520.38. Looking at the 4-hour chart, you can see we're still in bearish conditions. That resistance is up at 524.29. So like I said, I think we could get a retest of that same zone before we would get a little bit of a rejection. Going into the end of the week, you can see we're coming off of that 89 EMA here on the 4-hour chart, which is currently at 517.77. So again, super critical zone. Lots of indicators converging on that same area. Needs to bounce up to that 524.40 area, take out those ATR stops, and you can see volume weighted MACD starting to show some strength on the 4-hour chart. And then moving over to the daily here just for a moment, you can see that 8 EMA 520.01 finished just below that level after testing it. We did hold the 21 EMA there on the daily chart at 516.26, so just a little bit below those other levels between 516 and 517. Super important. Did hold that level. Want to see it get back above 520.01. Moving over to the Qs here on the hourly and the daily, you can see we got a very strong candle on the first candle of the day. Pushed all the way up to that resistance 443.91, pulled back substantially, hit the 21 and bounced. So that is a pretty bullish indicator for me coming off of that support level. You can also see a higher low setup there early in the pre-market coming off of yesterday's low. So everything here says this is definitely holding in there at least a little bit. Looks a little bit more bullish than it did yesterday for sure. Ended up positive on the day, 0.22. Momentum still bearish, RSI still bearish. We are back above the 21 EMA, however, that's 441.47. And my level here, 441.83. So everything continues to look a little bit better here today. And you can see that rejection off the 9 EMA and my level here, just like we saw on the SPY. So looks okay, a little bit better than yesterday, but not great yet. Moving over to the Tasty charts, again, you can see we did get that bullish reversal of conditions, got a couple of steps higher. That stop right now is 438.95. So just a couple of dollars lower from current price. And you can see volume coming through on that bullish candle on that dip low. Got a quick rejection up into that mid-range. Looks okay. You can see the ATR is starting to head a little bit higher. ATR resistance would be 444.83 for tomorrow's session. And then looking at that 4-hour chart, you can see we hit that dip low early in the pre-market, rallied right back into the middle of the range, still finding resistance at that 21 EMA here, which is 442.79, which is right at the level that we saw on the TradingView charts. And you can see still in bearish conditions here on the 4-hour chart. So nothing really has changed on the longer time frames, but the hourly is starting to show a little bit of strength. Moving over to the Russell and the Dow, these did completely different things here today. The Russell was up 0.66, ended up finishing just below that 206 level, 205.83, 206.50 is the level, and you can see we got back above the trend line, back above the 21 EMA. Momentum and RSI did not change, so those are still both bearish, but if it can hold this level, push above 206.55, that could be interesting. Start to push back to that 212.10. Certainly seems possible. I think the Russell is still a little bit undervalued relative to its peers. So Russell could continue to show strength. And then the Dow didn't really do much of anything, down 0.08. Momentum and RSI still bearish. Right in that same zone, wicked yesterday's lows and then bounced in the middle of the range. So not much of a change there on the Dow. Really need to see it get it back above 319, 391.55. And then push to the level 392.44 before you see any bullishness, in my opinion. Moving over to the IWM on the Tasty charts, I just wanted to highlight the most recent price action that we saw on the 4-hour chart. So last time we tested that lower ATR, we did bounce to the middle, and then we tested that low again before we got the rally. And that's kind of what we're seeing now. So we got the dip low, tested the low, tested the mid-range, could see a second kind of double dip there, momentum on the MACD, slightly bearish. You can see bearish conditions, ATR stopped there at 207.95. Doesn't mean we can't see a little bit more rally tomorrow, but right now the conditions are still bearish. Could find some resistance in here, find at least a double bottom, and then we could see a resurgence back to the bull side. But just keep that in mind. Like I said, I'm still bullish on the Russell, but it doesn't mean that we can't see a little bit of a double dip there. Moving over to stocks that are moving today, we got Intel falling 8.22% on the announcement that their global foundries business is not going to be making money for many years. I think they said 2028 or 2027, so several years in the future before their foundry business starts to make money. And they also announced around a $7 or $8 billion loss on that business. They're investing a bunch of money up front to get that business underway. And right now the company is tanking on that news. You can see we dropped a lot, $3.61, which is a lot on a stock that's trading around $44. And now it's down to $40. You can see within this trend, we did have a low here of around $25.14. And since then we've been trending higher. We got all the way up to around $50. So it did double during that time period. So 100% runner, definitely a nice move. Since then we've pulled back to 40. We're right at that 200 SMA. That is the critical zone right here. You can see very clearly 39.96. If it's going to hold, it really needs to do it now. You can see we dipped low, held the 200 here. That triggered that most recent rally where we went from around $32 all the way up to $51-ish, which is a substantial move. Again, if you get here and it holds around that $40, could push right back to that 50 zone, which again would be a nice move. I do really like the thesis that Intel is bringing chips to the American market, but if you are an investor, just understand that that business and that profitability could be many years in the future. Moving over to Apple and Tesla, both of these turned in a positive day, 0.48 and 1.05 respectively. And you can see we did break that trend line here. We did rally back up and test it. Let's look at that here closer. And you can see it here on the hourly chart, dipped below it yesterday, held a bottom, tested it here again today and rejected. Held the 21 EMA, which is there at 169.43. Again, I am not bullish on this until we get back above 170.90. I think that's the critical level. The trend line is important in my opinion as well, but realistically 170.90 is more important. Needs to hold that level and push if it's going to do it. Right now, looks like a retest and a rejection in my opinion. And I'm also very concerned if you're going to trade this to the bullish side. I think there's a lot of downside risks. So keep your stops pretty tight there on Apple. Similarly on Tesla, it did get back above the level, 167.34. It is rallying a little bit after hours. 21 EMA there at 173.46. That would be your price target, at least in the short term. That seems to be where we rally to and then reject. You also have the trend line just behind that at 175 or so. Momentum and RSI both look a little bit bearish. Next level for me, 152.43 to the downside. Moving over to Meta and Netflix, both of these turning in a very positive day, 1.88 and 2.58%. Momentum and RSI, both of these look bullish, continue to roll to the bull side, and they are both up even more after hours, so gapped and rallied. Next level here, 520.31, seems like Meta's going to find it. And then Netflix, getting a test of that resistance, did close above it, and it's up more after hours. Let's go ahead and add a level right there at the wick highs. That's going to be 634.38. We'll see if that level is important or not. And you can see zooming out here, the all-time high is up at 693.33. And if it breaks this level, there's really nothing in there. I'm sure you could find some resistance levels in here on that all-time high kind of peak before the bigger breakdown. But this is a very scary chart. We've since clawed almost all the way back up to those all-time highs. We'll see how this plays out over the next couple days, but it does seem like it has some legs. And again, if it breaks above this level, I think there's some pretty smooth sailing. Let's go ahead and extend this trend line out here. That would put your resistance up around 667. Moving over to staples and discretionaries, staples falling off a cliff, 1.1% to the downside, momentum and RSI very bearish. 55 EMA down there at 74.26. That's the level we talked about yesterday. Broke 75.40 yesterday as well. So the next support was that 74.26 level. You can see it's finding some support there in the highly traded zone, which is interesting. See if that can hold up or not. Otherwise, 74 below the 55 EMA. Seems very bearish, 3 bearish candles in a row. Might find a slight bounce, typically you do after 3 really strong bearish candles, but it usually gets sold in the medium term. And then discretionary, slightly bullish on the day, 0.07, still cannot get above that resistance level, so 180.10 and the trend line acting as resistance. 55 EMA was a little bit of support. Momentum and RSI both bearish. Moving over to oil and gas and energy, both of these are still on their colossal run. Very, very strong move. Continues to rally again here today, 1.25 and 0.68%. This is all-time highs here for energy. Oil and gas, not quite, but the next level of resistance, 160, 158. Both of these look very strong. You can see they're both in super overbought conditions, but when you get these kind of colossal rallies, they can absolutely push higher until we see some economic conditions shift, which doesn't seem to be the case right now. Moving over to breadth, we did end up holding the zone from yesterday, so still looking at 51.75 on the 20-day breadth. Momentum and RSI still bearish. 50-day breadth, doji on the day, so could present an opportunity for at least a little bit of a retrace. 3 bearish candles in a row. The third one not very strong, but could see a slight bounce back up to 77.46, which could indicate a little bit of bullishness tomorrow. Most of the indicators to me do show a little bit of bullishness tomorrow, and this is just another one. Moving over to yields, 2-year still doing not much of anything. 10-year throwing a big wick, got a new wick high relative to what we've been seeing. The high of day was 4.429%, so that is very substantial, definitely starting to push, and you can see these interest rates are getting closer and closer together. So we got the 2-year, we have a lower high relative to the previous, and it is falling here a little bit. And we have the 10-year starting to push back higher. Seems like we might be headed back towards normalized conditions, which is concerning. Usually once you get into normalized conditions after being inverted, that is one of the times to be a little bit more afraid. I still think the 10-year is probably going to break this 435 level. It is below it currently, and it did close below it today. But next level above that, 4.55%. Moving over to the dollar here for a moment, you can see the dollar did end up cratering here today, pretty substantial to the downside. 0.5%, took out the level, 104.41. This is not what I expected. We're still holding the 144 EMA here at 104.21, and we also took out the 9 EMA momentum rolling over, RSI bearish on the daily chart. Doesn't mean that it can't kind of hold this trend. Go ahead and add that here from the low. Couple of dip lows, so that would give you a little bit of support in there at 104.02. But right now this does look significantly weaker. We broke a level to the downside after breaking it fairly substantially, making a slightly higher high. So this looks like a bit of a head fake, and you can see last time we did this, we did sell off fairly substantial. So we'll see how that plays. If the dollar sells off, that should be a little bit bullish for equities. Moving over to bonds, you can see bonds found a little bit of a bounce. J&K positive 0.05 coming off of that support. You can see this consolidation continues to be important. We're still in that same zone, so bounced off that lower. See if we get a little bit of a bounce, that should be bullish for equities. And then looking at TLT, right on that same trend line, closed right at it. Technically above it just a little bit. We'll see if it rallies. That would mean that the 10-year is going to reverse conditions, which I'm not so sure if that's going to happen, but it does seem to be holding in this zone. Moving over to volatility, move index continuing to go higher a little bit today. VIX did gap higher and then sold off on the day, 1.92% to the downside. But looking at this a little bit closer, you can see that big gap up ended up getting to around 15 and then selling off. Momentum and RSI are still bullish here. Did get above that 200 just for a moment. To me, this still looks a little bit bullish. Price target up around this next trend line around 16.15. We'll see how that plays out. If we get some follow through, that would pull you down to around 13.80 in my opinion. Moving over to my accounts, I did fairly well. My positions worked out quite well. I had a 205 here on the IWM for 98 cents. You can see we finished about 20 cents below that, so that was all good. Was able to roll that out for 2 days and up to 206 for a credit, so $1.48 for the Friday session, which does give me a little bit of upside, about $1.60 or so from the closing price. And you can see it is up a little bit after hours, so gives me a nice little potential, a little bit over 0.5% in 2 days, which would be nice. And I can always roll out to the Monday if I want to, if the IWM finds some stronger legs. And then looking at the Qs here, you can see I'd held these same positions going into tomorrow, so it turned out to be pretty good. We're still in the money, so I got some protection down to 440. So if we do see a little bit of a dip low, maybe a double bottom tomorrow, I should be okay, but still gives me some potential to the upside. So my max profit is 443, so I still have about 90 cents per contract of upside potential, and you can see we're still in the red on open P&L, so that would come in as well. Looking at about $1.20 per contract. I have 3 contracts here, so about $300 hours if we can get all of that to come in tomorrow. And then looking at after hours prices, you can see we're up about 30 cents. So everything going well there, and I can roll up and out for the Monday session if I need to, making money on the poor man's covered call and the shares while still giving myself some protection and upside potential. Let me know down in the comments section what you thought of Fed Bostic. What do you think of all of this job owning going on from the Fed? They're kind of walking back some of those dovish comments that we had from Jerome Powell's speech at the FOMC. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.